Good afternoon, everyone. It's Monday, August 12th. Welcome to a new edition of Monday Market Picks. My name is Tilan Wickramasinghe. I'm the head of research for MIBG Securities in Singapore. Hope all of you had a really good National Day week, a long weekend, and hope you got to see the amazing NDP displays. But the markets also are now starting to show a semblance of calm after last week's carnage. But there's still a lot of fear out there as the carry trade unwinds, and there's a lot of data that we're expecting for the rest of the week, particularly in terms of US jobless numbers as well as inflation numbers. So times like this is when you need to stay calm and keep conviction. So on that subject of conviction, we have Jarek on the line today, and he's going to be talking about some beaten down stocks where he thinks now is the time to get in, given that there's a lot of conviction in terms of their fundamental stories. Also joining us is Erica. She says that not all is doom and gloom in China, and she's going to help us walk through the latest Chinese economic data and what to make of that. We also have Husseini joining us to talk about the latest Singtel results preview, but also the latest news flow that came out today that's actually beaten down the stock about 3%. So, and also I'll make some comments towards the end of the show on the changing of guards at DBS as well. Now, let's start with Jarek. Jarek, welcome to the show. I know you're on the road at the moment. Now, Jarek, you say that, can you hear us?
Yeah, sure. Hi, Tilan. Yeah, I'm here.
Okay, great. So, Jarek, you say that CSE, which is one of your top small and mid-cap picks, delivered a very strong first half result. What is giving you the confidence the second half and beyond is going to be stronger as well?
Sure. I mean, if you look at the order book remaining, right? I mean, firstly, let's go on the order book first. The remaining order book of about 692 million is actually 30% increase year on year as compared to last year, right? So the remaining order book is strong as of the end of 2Q, right? And then also in terms of margins, if you look at the margins, we are expecting margins to actually expand in terms of net level, even though the gross margins are staying the same because of operating leverage. And we have seen encouraging signs of margin improvement. So if you look at the first half net margins, it's actually increased from about 3.5% from about 3.2% last year. So that's an expansion of about 10% increase in net margins. And going forward, we think that the expansion for net margins in second half will even be better. So overall, if revenue increasing by 21% and increasing in net margins by plus even 1%, you'll be looking at quite a decent net profit growth of about 20% that we are looking at this year.
Got it. So pretty strong growth coming from CSC. So I think we're keeping a buy on that stock, and it's a conviction pick for us. Now, another stock that's actually performed really well is DYNA-MAC. The stock's up about 14% just in the past month alone. Jarek, why do you think it's going to take it higher from here, given its very, very strong performance? You got a target price of 64 cents, which is still a bit more to go from here. What do you think is going to be the drivers?
So I think now, I mean, they have delivered in terms of margins and in terms of numbers. I think their numbers were very strong, which they reported recently. And I think the next thing that we need to look at is, whether this is sustainable. So basically, they have still the expansion of the yard. They are still getting more contracts from their customers. Order book is good, but we are looking for the next lead. So I think that the next thing I'm looking out for is whether can they secure larger orders and bigger orders, which I think they can, but I'm waiting for them to deliver. So I think if they can deliver in terms of refilling their orders for 2025, 2026, then I think there's another leg that we can upgrade our target price and all. So basically, yeah, I think larger and bigger orders are what I'm looking out for.
Okay.
Oh, sorry. Also, just to add on, I think that also they have a lot of cash, so they've been looking to do an acquisition for a long time, but they are still looking for the right one. So I think if they can find the right acquisition that could add to their core earnings in terms of recurring income on the maintenance space, then I think that would be something that will re-rate the stock as well.
Right. What sort of probability are you putting in terms of an acquisition happening this year?
Well, I think about 50-50 lah. It's still hard to say. Yeah, but management is working hard to get the right one.
Got it. Got it. Okay, so that's another extra catalyst if that happens. Now, Jarek, one of the stocks that hasn't done particularly well is FRENCKEN. The stock's down about a third just in the past month alone. Yet you say that this is a very good entry opportunity for the stock. What are you seeing that the market is missing out on?
Sure. I think if you look at Franken, basically the fundamentals, this has always been our topic. Fundamentals has been quite good. I think fundamentally, this is the only semicon tech stock in Singapore that's showing year-on-year, Q-on-Q growth. And I think that, after this round of Q2 results, it will even show that they are the cream of the crop for Franken. If you look at the share price weakness in the last few weeks, basically I think it's just mainly due to market, where the market was there was a tech sell-off and then the market was quite volatile as well. So Franken being a high beta stock, the correction was mostly due to market movement. So as a result, we think that when the price dropped so much in the last 2-3 weeks, which is not due to fundamentals, then likely there is a very good it's a very good buy after such a big correction, especially with results coming out on Wednesday, which we think that will likely perform better Q-on-Q and year-on-year as compared to other players like UMS and AEM, which will likely report quite bad results. And also, I think Franken's outlook is also quite positive, and management should continue to guide a very positive outlook. So with that, we think that the share price has corrected quite a lot and is due for a good rebound when the numbers come out.
Right, and we got three more days or so to go for the numbers to come out. So that this is probably a good window to look at this stock right now.
Yep.
Okay, thanks, Jarek. Thanks for joining us.
Thanks for having me. Thank you.
So I actually want to jump into technicals right now because technical analyst is actually highlighting CSE and DYNA-MAC as two trading buys right now. So one of his topics is CSE. He says that the share price correction may have concluded and we are in for a rebound, and it actually might rebound and challenge CSE's previous high. So do have a look at our technical charts on that one. Also, a similar sort of story for DYNA-MAC as well. I think the recent stock correction has hit a low of Sing$ 0.485, and momentum has started to pick up again. So I think at this stage, our technical analyst says stock is worth looking at, and it's probably in for a breakout run as well. So CSE and DYNA-MAC, both from a fundamental point of view as well as from a technical point of view, giving out some very strong signals that the time is right for these stocks. With that, let's bring our macroeconomist in. We've got Erica on the line. Now, Erica is here to help us make sense of China. Consumer good inflation saw a positive reading for the first time in about 16 months, growing at about 0.5% in July. Can you, Erica, put this into context and also share with us how significant this development is?
Sure. Thanks for having me, Tilan. So for China's consumption, I think we have all been closely watching when the Chinese consumer will be out of intensive care in the last 6 months. So you've seen consumption stocks, becoming better, whereas China's in a two-speed economy. So industrial production, especially high-tech export sectors, were doing super well. So I think a bit of good news there from July's CPI numbers. So the prices of consumer goods in China have finally started to increase, albeit by a little bit. So it rose by 0.5% in July year on year. What's significant is that this is the first time in 16 months that consumer goods inflation has turned positive. So what's been happening before that is because consumer demand in China is soft, so retailers have been engaging in price wars and cutting prices of things from electrical appliances to automobiles, and that has sank the consumer goods inflation. It's been in negative territory for more than a year. So finally, with the July reading, I think there are signs that, you know, there's an end to the price wars in sight, and that will spell good news for companies' margins, because, you know, they have been having margin compression due to the price cuts.
Got it. So I think we're going to start to see some margin improvements happening, and it's certainly a good sign. Do you think that there will be more policy support as well coming from the Chinese government to lift consumption?
I think so. I believe so. After the recent Politburo meeting, which is a quarterly meeting of top policymakers, they actually made a mention that economic policies will henceforth put more focus on boosting consumption. So this is a huge policy shift. So for the first time in a long time, you know, putting consumption as a priority. And then immediately after that, last week, the State Council, which is China's cabinet, has announced 20 steps to boost services consumption. So it mentioned steps to encourage Chinese citizens to spend more on childcare, elderly care, and also to upgrade tourism to sectors such as concert tourism and sports tourism, and also a specific mention on tuition. So as we know, China has come down quite hard on after school tutoring last year, because, you know, they don't want children from the better families to enjoy an unfair advantage. So this time the directive was quite nuanced. The State Council would like to encourage non-academic tuition. So we can perhaps look forward to more initiatives or more measures to encourage things like music lessons.
Right, non-academic tuition. Okay, more ballet classes and music, I suppose. Now, you know, the consumption side is only like one engine of China's growth. I mean, exports is also a big contributor. Now, July exports actually came in slower than expected. What does this mean, Erica? And is this something that we should be worried about?
So July exports indeed came in a little bit slower than June. So it grew by 7% instead of 8.6% in June. But I think the numbers are actually better than it looks, because the July number was actually weighed down by a retraction in petroleum exports. But if you look at the things that China is trying to push, right, high-tech exports, that actually grew by 12% in July, which is double the pace of growth in June. And if you look deeper within high-tech exports, integrated circuit chips up 23%, automobiles up 13%. So very healthy numbers there. And we also notice that, you know, despite what we just discussed about weak domestic demand, actually China's imports rebounded in July, so it rose by 7%. So what's going on there, we believe, is the companies in China trying to stockpile components. So we saw a 24% rise in Chinese imports from the US. So this is quite interesting. So we think that, you know, this is probably a sign of US companies trying to ship as much components to Chinese customers, you know, before further trade restrictions make it difficult to do so next year.
Right. So it's a very sort of sensitive path that some of these companies have to tread on. But I think this is what really matters. It's really about reading between the lines. I mean, when you look at the headline numbers versus what is actually happening on the ground, you do see some positive developments. And thank you, Erica, for bringing us that.
Thank you.
Now let's go back to stocks and let's bring Hussaini on the line to talk about Singtel. Hussaini, are you there? I think we just got to give him a second to get online. I think just to give some background, we have seen Singtel's stock dropping about 3% today, with news coming that Optus fell out with its mobile towers investor, Australian Super, which is Australia's largest superannuation fund. So Singtel, Hussaini, maybe you can walk us through what happened and what are the implications here for the stock?
Hey, Thilan, thanks for having me. So let me step back and give a bit of background. So in 2021, Optus sold its towers to Australia Super, and at the same time, it committed to lease back around 500 or more than 500 new towers, which the TowerCo had to build. So far, TowerCo has delivered around 200 towers, and the shortfall will result in the penalties in our view. Okay. Now, from the article, it is not clear who has to pay penalty to whom, but based on our understanding, Optus should receive the penalty as TowerCo has failed to deliver. Okay.
Right.
So that said, Australia Tower is a small part of Optus or as a Singtel as a group. So we estimate the SOTP contribution of Optus Tower to be very minimal at around 1%. So in our view, the P&L impact should be fairly minimal. So all in, I don't see the news as a major development to trigger a 3% stock correction. If at all, it is positive for Optus from the P&L point of view, because in our view, Optus should receive the penalties. As such, we see this correction as a buying opportunity.
Right, so it's a knee-jerk reaction. So there is a potential for buying the stock now. So actually, we are going into Singtel's first quarter financial year 2025 results, which is out on the 15th of August. So this might actually be a catalyst as well. So Hussaini, what are you expecting for those results?
So we see a decent delivery in first quarter. We expect earnings to be up 7% year on year and 5% quarter on quarter. If you see, all of the Singtel associates have already reported, with AIS and Globe Telecom posting double-digit earnings growth, which came ahead of expectations. Other two associates, Telkomsel and Bharti, was in line. At the core business, we expect Optus and Singapore Mobile to post a decent mid-single digit year-on-year top-line growth. On the margins front, we expect around 1 to 3 percentage points improvement at Optus and NCS levels. So all in all, a decent operational delivery in our view. The only offsetting factor was the FX, with Singapore dollars strengthening against most of the currencies. So all in, we expect a decent delivery with no major areas of concern going to first quarter results.
Got it. So decent delivery, knee-jerk reaction in terms of stock performance today. So could be a good entry opportunity for Singtel as well. I've got a question from the audience from Mr. John Tan, who's asking, following bank earnings, are they the best dividend picks? If not, what else should I look at? And I think Singtel, given a 5-6% sort of yield, is actually a pretty good stock to look at as well at this stage. Now, talking about banks, last week we saw the announcement that there's a changing of the guard at DBS, with CEO Piyush Gupta announcing his retirement after 15 years at the bank, and Tan Su Shan taking over from March 2025. Now, for first off, I don't think in terms of the changing of the guard, this is not really a major surprise. There has been quite a bit of rumors on the street that Piyush Gupta is looking to retire, and Tan Su Shan was one of the front runners. So I don't think there's going to be a major surprise there. Now, from a strategy point of view, we don't think there'll be a big shift in DBS as well. If you look at Su Shan, she has been with DBS as long as Piyush Gupta has, and has actually been part of the transformation process of the bank from being a wholesale bank to a more universal bank with a big wealth franchise. And she has actually headed wealth, she's been with consumer, she's now heading the institutional business as well, which together is about 90% of DBS's revenue. So she's very familiar with how the bank is being run. Now, having said that, as she takes over in March 2025, she will have some critical challenges to address. The first is a slowing North Asia, particularly Hong Kong, China, where about 1/3 of DBS's exposures are in. So I think this will require her to re-strategize what to do with North Asia. The second is within her first year of tenure, we probably will be in full-blown interest rate cuts. So again, DBS has enjoyed a strong interest rate expansion and margin expansion over the last 2 years. So she will have to deal with the interest rate cuts. And finally, DBS has about $5 to $7 billion of excess capital, which in the past management has said that they do want to return back to shareholders. So we will have to see whether this will be something that the new CEO will stay the course on, or whether there will be a course change here as well. So I think in terms of continuity, stability, we don't think there's going to be much change. Obviously, there will be some strategic, calls that the new CEO will have to make. We are keeping a buy rating on the stock. We think that, overall dividend yield of the stock is very, very good. And they will actually have the ability to hold on their margins a little bit better than UOB and OCBC as interest rates come down. So I think for John, DBS would still be one of our preferred dividend picks as well. We think some of the REITs like CICT and CLAR are also interesting at this stage, but you may have some volatility in the near term as interest rate goalposts get shifted around. With that, let's go to what's happening in terms of upcoming events and dates. We've got quite a few results coming out. CICT coming out 13th of August, Wilma also on the 13th of August, and then Genting Singapore 14th, CapitaLand Investment on the 14th. In terms of other events that we are hosting, if we go to the next slide, we've got quite a few events. We are hosting SIA Management today. I hope that you have got your sign-ups already in place. We've also got SGX Discovery Night happening on the 22nd of August. You can sign up for that by directly scanning the QR code on your screen right now as well. And with that, we are out of time. Thank you very much for joining us as always this week. We really appreciate all your support and have a fabulous trading week ahead. Thank you.